There are a lot of couples that are on a debt-free journey, and we all get to a point where we need to decide, should we close those credit cards that we've already paid off? Some people say, yes, close all of them, and other people say, no, wait, you'll ruin your credit score if you do that. So today I will calmly walk you through your options so you can make a decision for yourself. Hey lovebirds, I'm Dan Hinz and welcome to Adulting with Money. Here I am all about helping you as millennial couples unite, not fight over money so that you can get out of debt faster, save up for a house sooner, or you just want to be on the same page. If you are on a journey to become debt-free and you've paid off a bunch of credit cards and you're starting to think, okay, should I close these accounts or not? And you've been doing research on the internet, you've probably seen both sides of the argument. You've had people say, yes, close all of them, get rid of them, they're evil, be done with it. And you've seen the other side where some people say, well, yeah, keep them all open, keep them going, it'll help your credit score. And you're sitting here stuck in the middle thinking, well, I just want to do what's best for myself, for my partner, for our family, and I just don't want to make a huge mistake. Today, I'm going to calmly walk you through what actually happens to your credit score when you close a credit card account. And then I've got a couple questions that have nothing to do with credit scores that you need to think about before you close a credit card account. And finally, I'll walk you through how I think. What would I do if I were thinking about closing a credit card? The 800-pound gorilla in the industry is FICO. So we're going to be using their credit score model to talk through this situation today. And FICO uses 5 areas to determine what your credit score is going to be. Number 1, how many inquiries or new accounts are you trying to open? Number 2, what's your credit mix? What type of debt do you have? Number 3, what's the length of those credit history? How old are those accounts? Number 4, have you been making on-time payments? And then number 5, utilization. When it comes to closing a credit card account, which of these do you need to not care about? And the first one is going to be inquiries, opening new accounts. Well, we're closing an account, so we don't need to worry about that. The second factor is credit mix, and we don't need to really worry about this because this area of calculating your credit score is, do you use credit cards? Do you have a student loan? Do you have a car loan? Do you have a mortgage? And the different types of debt that you have, and if you're handling them responsible, raises your score. So if you're closing one credit card account and you have other credit cards, this part of the credit score really isn't going to matter. I'm going to combine numbers 3 and 4, the length of your credit history and your history of on-time payments. And this is where a lot of people start to get really uppity about you should never close your credit card accounts because they believe that when you close that credit card, all that goodwill that you've been building up for your credit score goes away. All of that information actually stays on your credit report history for about 7 to 10 years. So you're not going to continue to build upon it, but it's not going to disappear immediately. The final area I'm going to talk about today is utilization. And so this is the big thing. This is something that could affect you immediately and could affect your credit score immediately when you close a credit card account. So here's 2 really simple examples. So the first example that we have is, let's say you have 4 credit cards. 3 of them have a $5,000 limit and you have a Target credit card with only a $500 limit. On average, if you're spending $3,000 a month on your credit cards, that's about 19.4% utilization, or $3,000 out of $15,500 credit limit. Now, if you close that Target card, your credit limit is going to drop by $500 down to $15,000. You have $3,000 a month that you're spending, and your utilization really peaks at about 20%. That's not a huge impact. So if you're closing that Target card, there's not much to worry about. Now here's an example where it can make a huge difference. Let's say you've closed that Target card and you've only got those 3 credit cards left, and each of them still has a credit limit of $5,000 each. On average, you're still spending $3,000 a month on your life and on your credit cards, and that's 20%. But if you close one of those other cards, your credit limit across your entire life drops to $10,000. And if you're still spending $3,000 a month, your utilization jumps to 30%. And what the credit card companies are going to see, and the banks and the credit score, is that, oh wow, you're using a lot more of your credit limit every month, and that's a bad sign. Now that we've gone through what happens to your credit score if you close a credit card account, there are some other questions that you need to be aware of. Number 1 is, does your credit card have an annual fee? So let's say you have a card, there's an annual fee, and as you're using it, you get bonus points or miles or hotel points, but you just don't want to use that card anymore. And here's this annual fee that essentially is going down the tube. You just don't want to pay that anymore. what you can do is call your credit card company, call the bank, and see if you can downgrade your account. Try to downgrade to a credit card that doesn't have an annual fee. Most banks are going to want to keep you as a customer. So if they can downgrade you and keep you as a customer, they're going to. But they may say no. They may say, well, either you have the card with the annual fee or you have nothing at all. And in that case, I'd say, well, let's see if we can get rid of that card, because that's money out the door that we don't really want to go out the door. Second question is, will my bank close my credit card account if I'm not using it? And the answer is yes. Eventually, a bank will close your account due to non-activity, because they're spending time, energy, and money to keep track of your account, but you're not using it. And you might get a warning, you might not get a warning, and eventually that credit card account will be closed, whether you want it to be closed or not. One thing you can do if you want to keep a credit card open but you don't want to really use it on a regular basis is take that credit card and use it to pay off some sort of monthly subscription like Netflix or Disney Plus or your cable bill or your internet bill. So that way it's being used every month. And if you set up automatic payments, so your Netflix is getting paid automatically by this credit card, and you set up your credit card to be paid off every month automatically, then basically you can set it and forget it, and you can keep that card open for as long as you want. The third and final question is a big one, and it's to ask, what if I have trouble with spending? If I'm really bad with money and I've had a lot of trouble with putting a lot of money on credit cards, should I close the account? And I think everyone will agree that if you have some sort of problem or addiction, you should cut yourself off. And in general, I would say yes, go ahead and close that credit card account. And here's why. If you think about the rest of your life, the next 10, 20, 30, 40 years of your life, it's definitely important that you need to get a handle on your finances and your spending. And so if you cut off your credit cards, I think everyone agreed that's a good idea. But then the flip side of that coin is, well, what if I'm shooting myself in the foot when it comes to my credit scores? What if I get a handle on my spending, but now my credit score goes down and I want to get a mortgage or I need a new car loan or something like that? And to be honest, the long-term benefits of getting a hold of your finances versus the short-term cost of closing those accounts is a great trade-off. So if we go back to credit scores, the big thing that's going to affect your credit scores when you close a credit card account is your utilization. Your bucket gets smaller, but you're still using credit cards on a regular basis. Now, in order to fix that, all you have to do is sign up for new cards. Now, if you are keeping your cards open and you're bad with spending, but then you start to miss payments and you start to get into trouble, that negative activity is going to stay on your credit report for 7 to 10 years. So it's better to cut yourself off and avoid that negative activity on your credit report than it is to keep it open and expose yourself to that risk. So now, if I were going to close a credit card, here are the questions that I would ask myself. Number one essentially is, what are my goals? Am I trying to curb my spending or take control of my finances? Or are these credit cards just an administrative nuisance that I'm trying to get rid of to make my life easier? And depending on the answer to those questions depends on whether or not I'm going to close this credit card. Number two, an annual fee. Does this credit card have an annual fee, and can I downgrade it? Depending on whether I'm paying that annual fee or I can downgrade is going to depend on whether I'm going to close this credit card. Number three, is there some sort of monthly subscription that I can put on autopilot, that I can keep this card open for a long time? And if there is, well, it's going to help my credit score and I don't really have to think about it, so might as well try it. And the big thing you really need to consider, and that what I would consider, is what's going to happen to my credit score, my utilization. If I'm going to be closing a credit card that has a big credit limit, that's going to have a large impact. But if it's a little card, something like a Victoria's Secret card or a Target card or a Best Buy card or something like that, that is really not going to make a big impact, I might as well close it. If you like this video, be sure to check out this one where I talk about one of the easiest ways that you can raise your credit score or help your partner raise their credit score.